I'm Dan Haines. I'm one of the partners here and also a senior wealth manager. I also lead our investment efforts for the firm. And you've probably seen some videos with me in past quarters. We're going to do a little bit different format for this quarter, more set up as a Q&A. The market update reports that you're used to seeing will still be available and have more detail on the numbers, but we thought this would be a bit more helpful just to talk through what happened in the previous quarter and some of our thoughts on it. As I've been talking to clients, I think the biggest news items have been tariffs early in the quarter, and then the main one has been the conflict in the Middle East. And I think clients have been seeing and feeling in their pockets the impact of higher oil prices, which have spiked during the quarter due to the conflict, and really been wondering how that impacts their portfolio. There's been some concern because, one, when there's a conflict going on, we're focused mainly on the finance side, but we can't ignore the loss of life and things that are happening. So I think naturally it creates some concern and fear for clients. Also, if you take what's happening and think about, the worst case scenarios, we've seen episodes in history with, huge oil price spikes and, the concerns about, what that could do for them just in terms of their budget, but also the economic impact in the coming years. Throughout this market volatility, I think one thing that investors maybe weren't paying close enough attention to is the earnings outlook. Over the long term, we expect stocks to be driven by growth in earnings. And the outlook for 2026 is currently pretty strong. Analysts are expecting double-digit earnings growth for large U.S. companies. And what was interesting is that during the first quarter of the year, their growth expectations actually increased throughout the quarter. So despite the headlines we saw, volatility in the markets, rising oil prices, the earnings growth expectations actually improved in terms of what the analyst community was thinking. After being in this industry for 20 years, this isn't the first time I've seen these kind of geopolitical events happen or something that leads to volatility in portfolios. When these things happen, I always try and take a step back and look at the bigger picture. One, knowing that most of our clients are invested for the long term. And two, when we put portfolios together, we expect things like this to happen. Same as when we put together financial plans for clients. We know there will be periods of volatility in the markets and really want to build robust portfolios that will get clients where they need to be over the long term. If you're feeling a little uneasy throughout this environment, that's completely understandable. I think it's worth noting that when we work with you and our clients, we build portfolios with the expectation that things like this will happen. A couple things we'll do is with the bond or stable part of your portfolio, we're really focusing on stability and higher quality assets that won't be as volatile or susceptible to inflation spikes. And then, with the equity portfolio, we're diversifying across, different segments of the stock market. There can be different drivers for different parts of the stock market. And we saw that during the first quarter. If you just own, the largest companies in the U.S., it would have been a tough 3 months. But by owning some smaller companies, some of the more cheaper companies, and also international stocks, it smoothed out the ride for many of our clients. Looking into the second quarter, we've seen a nice rebound in stocks just in the first week or two. So I think, the things that investors will be paying close attention to are things like inflation, the labor markets, and those two things drive expectations around what policymakers will do with monetary policy, and then just continuing to see where corporate earnings growth trends throughout the year. As I mentioned, the outlook is pretty strong right now, so seeing if we continue to maintain that momentum. Thanks for your time today. We really appreciate the opportunity to serve you and appreciate the trust that you place in us. If you'd like to see more details around what happened in the quarter and some numbers and charts around the economy and markets, please take a look at the quarterly market commentary that we put out. And if you have any questions, please reach out to your advisor and we'd be happy to have a conversation.